hilarious. All right, we're gonna get started shortly. News left and right. This is gonna be great. It's gonna be a great week. News left and right. This is also not going to be a long stream, but one of the questions that I keep getting, one of the questions I always get, is how much do I let the news impact my plan or what I'm doing for the week? It's a consideration, but it's definitely not something that overrides my practices or my habits as a trader. So, we'll dive into a little bit of that. Today, though, the goal is to cut straight through the noise, have a plan, and accept that there are some variables that you can't really account for. Obviously, when I said news dropping left and right, I'm talking about the negotiations with Iran. I'm pretty sure all of us are sick of talking about and hearing about all of that, but it's part of the game. There we go. That should help. All right, so gather your charts, get your information together, get your setups, whatever it is, things that you want to talk about and or comment on. You can use the chat to do so on. I can see some of your comments. So there's the X chat underneath the stream, but there's also the post itself. I can see all of those things pretty much no matter where you're commenting from. All right, so let's dive into it. It's pretty simple. Start the day off very similar to, this is what I did last week actually. Last week I had like a list of things that I put up here, right? Notes for the week. Indecision. Volatility remains elevated. Iran and war, that turned out to be massive. An absolutely huge deal. Glad I wrote it down. Despite the recovery, the market is at an inflection point. I should say at inflection points. Consider the market weakness is not from the war and definitely not SpaceX IPO. Let someone else go first. Not out of the woods yet. All that turned out to be true. Anticipation, trade the extremes. Even though the market had gapped up, this was massive. This was a huge deal. And the reason it was a massive deal is because, come on. I don't even think we need to dive into this, right? I don't think we even need to go here. I had the biggest trade or one of the biggest trades of the year. It's incredible stuff. And let's disconnect there. I don't know how they got connected at the same time. It's funny. The reason I'm excited going forward is because not only are we approaching this resolution and I guess what I'm going to call reckoning in the market, but I felt the market traded a little bit more predictably last week, and that might contradict what some others saw and felt, but the reality is I found price action to be a little simpler. I found the market to have this air of continuation in certain areas that you wouldn't typically find. And we also saw the news itself wasn't the only driver of the price action. To me, that's a massive deal. It's a huge thing. I'm saying that because if I were going to spend time on figuring out where I belong in the market, I would want to have some confidence, of course, that not only is the work that I'm putting in going to yield returns or yield results, but I want some consistency in the performance and the overall market performance. To me, that's a massive deal. So we got our notes for the week. I'll edit this as time goes on. Indecision, sure. Volatility remains elevated. Let's go double check that. Don't need to see auction prices. What we actually need are volatility numbers for the upcoming week. .82. Oh, that's gonna change. You can guarantee that's gonna change. Let's see what the end of the month looks like, though, or the end of the week, technically. It's funny, the market is sort of pricing in this idea that it's gonna be calmer, or that at least that's how it ended last week. Yeah, we could pretty much throw all that in the trash. I said this a couple weeks ago and people thought I was crazy. I said, an end to the war? Come on. That's not what anybody wants. Give it a break. No one in that administration thinks that's the case. They're going to continue this back and forth for as long as whatever agenda they have going on remains in place. So I'm starting this week off with that in mind. Like I said, I'll edit this as it goes, or as we go through these charts. You guys ready for turbo mode? I'm ready for turbo mode. I'm ready to step on the gas here. So here it goes. What's my bias going into the week? To be honest with you, my bias is short. There's too much garbage. There's too much going on. There's too much happening for me to approach the market and say, yeah, I think we could go higher. We might go higher. It's very much a possibility. But the market didn't like the Kevin Warsh conversation. The market didn't like anything he had to say, really. I don't think he was purely hawkish. I just think, you got a guy coming in and he's a little weird, a little strange. And the market didn't like that. It's not Jerome Powell. So maybe that changes in the future. So that's the first thing. Why am I coming to you and saying my bias is short first? Because you need to get it out of the way. It's that simple. If you're not aware of what your bias is, you're cooked. So that's the first thing. So I'm well aware of that. Would I like to see some downside activity? Yeah, sure. That'd be great. It's tough to kind of want to trade to the upside in the middle of everything that's been going on. That's how I view it. The next thing I would say is the market recovered some of that activity, some of that downside momentum. Let's get rid of that. The market recovered a little bit of that, and I felt this might have been an overreaction, but I do think that the market bought a lot of this without knowing what the hell was going on, or without knowing what it was doing. That seemed to be the case. The market was definitely, I even saw people in the comments, and if this is you, I'm not taking a shot at you directly, but I have heard people, and seen people, I should say things like it was an overreaction, buying the bounce, worked out great overnight. If you bought that, I dare you to get into the habit of doing that. I dare you. And we won't hear from you in 6 months. So the activity that followed, there was no follow through in the regular session. That's very difficult for me to part with mentally. I have to keep that in mind. I was not impressed by the way things traded on Friday. So those are the main things. And I guess maybe in my notes here, let's do it. The funny thing is, I didn't look at this but maybe one time the entire week. Even though I made these notes. These notes were really more so for you guys than they were for me. But alright. Notes for the week. Indecision. Volatility remains elevated. Indecision on Friday. We'll put that down. Indecision on Friday. Volatility is no longer elevated. Technically, volatility has been crushed. What else we got? Iran, war. Those are still things to keep in mind. Despite the recovery, the market is at an inflection point. It's funny, that's actually still true. Consider the market weakness. Market weakness is not from the war and definitely not the SpaceX IPO. We don't need to talk about SpaceX anymore. Hot garbage. Let someone else go first. All these things still apply. Patience for traps on either side. I mean, all of this actually works out great. But I will add one more thing. I'd put indecision on Friday. Fuel to fire over weekend. Just as a little reminder that everything that's happening right now before the futures market opens, they're throwing a little more fire on the or they're throwing a little more gas on the fire. Volatility has been crushed, but I'll also put, but not for long. I'm not put a question mark there because we don't know. There you go. And you might be wondering once again, why is SP streaming so early? It's not that early. But also, I think it's important to do this without all the noise of everything that's showing up. Those headlines are starting to hit, and it's just a lot easier to get everything structured and focused in the morning. Plus, the morning is, it's when my trade brain is active. All right, let's make it happen. We're going to go into turbo mode. First thing I'm going to do is all these levels, I'll put them back if they make sense. This was great. This is a great trading day. I'm also not looking to have the market gap up or down or see any kind of major strength or weakness. We don't know what's going to happen just yet. I will say, though, that this is also funny. The market gapping up the way that it did and then just returning to balance. I said that so many times last Sunday during the stream. But anyway, top-down analysis, you know how it goes. There's a lot of lines on this chart, and they all got to go. All of them. We'll just move them down here for now. We'll also get rid of this because I don't need it. Pressure rail, we're going to change all that up. Pre-market highs and all that other stuff. Cool. We can keep it. This line, got to go. Green lines from my trades, they can go. Look for the break of the pre-market. Yeah, that can go. That trade was such a good trade that part of me wants to talk about it. How I went short here and then waited for the FOMC situation to happen. And I also took 2 other trades that day after these bounces. Massive. But I'm sure that's not something that you were used to hearing on your timeline. Most people were saying Trump or Kevin Warsh is Trump's guy. He's going to be dovish and whatever else. You probably just need to follow some other people, man. You probably just need to get some other perspectives. Because it ain't how it works. And it's not going to be how it works going forward. But anyway, structurally. Top down, daily chart. We're near the all-time highs. Don't forget that. We're pretty close. Market is also at an inflection point. Since we're at the all-time highs, it's really easy to say, yeah, we should go lower. I would not go so far as to say that right now, but the goal should be wait and see, as I posted in my notes on that chart over here. Let's see if we can get that into the frame to make it a little bit easier to follow along with. There we go. It's actually up here. Indecision on Friday, fuel to the fire of the weekend. Volatility's been crushed, but not for long. Okay. Obviously, we're near the all-time highs. As long as we keep all these things in mind, it should be all right. Price action over everything. Patience for traps on either side. So that's the goal here. So once again, daily chart. And there are no very clear pivots. First thing we're going to do, I guess, is go to the rangefinder since we don't have to stick to those other numbers before. I wouldn't write off the levels that I already got there, but instead I would keep them in mind. 747.06, 749. That's close enough to 747.50 and 750 itself. So they also fit technical levels, like where the candle highs are. So I'm also not too concerned about that. I'm okay overriding these. What do we got for volatility? All right, so for pressure rail, 12.75%. Mind you, we're going to have to use the closing price from Friday, 746.93. $740.98. All right. That is a very small range. That's crazy. That's next to nothing. Now, obviously, these numbers came from Friday's close. If you don't know what this is or how it works, I made it myself. What's next? So we got 740.98. So now let's go and get tomorrow's data, tomorrow's numbers. 8.82%. That's laughable. That's crazy. If we end up with a choppy week, which I don't think we will, but if we do, then I'll just trade the momentum from the extremes back into whatever the range is at the time. Unless I can get a crazy extreme and then just, I would say swing trade. I don't think that's what I would be doing here, to be honest. All right, well, we got anchor rail, previous day's close. Okay, and we won't be able to know the live rail until later. 742.81. There we go. And we'll keep the live rail numbers until the open, which is the blue line. All right, and then I guess we can get rid of this red box. Okay, so that's what we're talking about. Pretty limited range here. Next up is the 65-minute chart. And honestly, this is too easy. It's so easy that's we don't even really need to talk about it, but we'll just go ahead and throw this up here. Previous day's high. All right. Easy enough. Super easy. Pre-market high, we won't know what that's going to be until later, so we can go. Pre-market low, we won't know what that's going to be until tomorrow, so there we go. Previous day's low, sure, if you want to include that. Let's make sure we got very precise levels. Previous day's low actually goes there. Previous day's high is actually... This activity got a little funny here later in the day. But I'm rocking with it. Let's make sure. 748.13. 748.23. All right, we're good. What's this? 18. Okay. So that was the new high of day. So this is your range, folks. This is... The live rail really doesn't belong there. Actually, you know what? Just because we don't have it, we're going to get rid of it for now. I'm not going to use that until morning shows up anyway, or until the pre-market tells me what the open is for the day. So this is good. I also wrote about be careful shorting into the hole which was great advice for the week. But once the Fed got to talking, it actually made for a great trade into the hole. And then obviously it recovered in the future session. All right, so it's looking good right now. Limited range. Basically, we just need to pick a side, pick a direction. We can also change up our volume and go week to date maybe and see what last week looked like. So obviously most of the volume was here. We can pretty much figure that out because it sat here all day. The next two spots, just underneath the anchor rail. This tool is amazing, but it's also where the market deliberated before the Fed speech. So that's also not surprising. And prior to that, markets sat here the previous 2 days during that short week. So it doesn't really, we know where the volume, we know where everything traded the entire time. That should come as no surprise. Now here's how I'm viewing it. If I really wanted to take a strategy to the market for tomorrow, it's going to be very simple. We don't know if the market's going to gap up or down. Let's say it gaps down because of all the stuff going on a geopolitical level. That would be understandable, right? Now, and if you don't know what I'm talking about, you can go look up some headlines. Iran's negotiating delegation has left the venue and will not continue talks tonight. That's what they say right now. But they're talking. So we can't completely disregard everything. If you hear a trader say, oh, it's terrible, it's the end of the world, market's going to go down because talks have completely stopped, they're leading you into a trap. At any point in time, Donald Trump or whomever can go wherever and say whatever about whatever. Easily. Say, no, we're back to talking. Market can easily take any gap down and make its move higher. So the approach that I'm going to take here is trade the extremes once again. If the market gaps down, we need to be paying attention to this area. So now it's time to draw some pivots, which I absolutely hate doing. We got to start talking about where the market might bounce and retest from if it breaks down. We just can't ignore this, unfortunately. Why don't I like doing this? Well, it's pretty simple. When the market moves aggressively, you got to start deciding between continuing with the momentum or identifying extremes in ranges and trading the bounce. Now, me personally, this isn't too difficult to do. Whatever the pre-market low is, the market breaks below that and retests somewhere in that range or somewhere, let's say, in here where, actually, we might need to get a little more specific now that I'm looking at it. So for this day, just this day, the volume here is substantial enough. This is probably a really important picture. See, these line up. This one, that lines up. Here and here, that lines up. Here and here, not so much. But it's showing us the pressure rail from Friday's close. It shows us the volatility, or it shows us the options pricing, the range that the options are priced in. It's given us just enough. If I were to maybe take that off, all right, it's good. This works. I think this is a really important image. I'm going to take a screenshot and try and let's go ahead and save that one. It's good. It might be beneficial for the future. It might be valuable going forward. So we'll keep this in place. I'm putting that as a potential bounce just because it is technically the extreme. And you know what? We'll extend right. There you go. All time frames. It just can't be ignored. It can't be helped. But at least we know there was substantial volume here. The reason this is important is because if the market breaks down from here and starts to trade around here for long enough, could you get further downside activity? Sure. If there were no volume traded down here and the market made this move, I actually would think this might bounce dramatically because there hasn't been very much traded here. That's the danger. That's the thing I would have to consider in that situation. So we're going to go ahead and get rid of that. The next thing, as far as the upside moves, if the market gaps up for some reason, at this point, it's kind of tough to see that happening, right? If the market were to gap up and it's trading in a weaker fashion, 3 times last week, I traded short from, or actually twice last week, I traded short from the market hanging out and hovering above this anchor rail here. If the market starts hovering around here, obviously we need to find a pivot over here, and obviously that pivot should be, we could say is this one. I prefer to just, I like it. It was the high from a pretty important day. And I'll go ahead and just actually extend right, all time frames. There you go. Pretty good. So what you probably are noticing is that anything hanging out around here is no man's land, because there's a very limited upside or downside to any additional level. So the market might make this move, let's say above a previous day's high. These numbers just aren't that impressive, so you kind of have to cancel out everything that happened on Friday, and maybe you get some extreme levels from the pre-market highs or lows. Maybe. But that's SPY in a nutshell for right now. This means that tomorrow, once I see what those pre-market levels look like, I can determine from a day trade perspective only where we might be. As I already told you, my bias is that there are headwinds right now. What I would really love, this would be my dream scenario, the market takes a tweet of some sort or a post of some sort overnight from the president or whomever, and all of a sudden the deal is back on. Talks are going great, all that, the usual, but doesn't show any really strong momentum to the upside, and instead trades kind of weakly around here. Doesn't clear any of its major pivots, and honestly I kind of feel like I'm pretty particular about those kinds of things. So the ideal scenario would be the market makes a little move up here, everything's going great, everybody's happy, price action ends up, let's say even, we get a pre-market high somewhere around here. I'd love all of that. And then right before the market opens, market comes back down here, hangs out, trades around here, all that. And if at any point in time, the market can maybe hang out around here again, which I think is pretty likely, is possible, and doesn't clear this previous day's high, well, to me, that's an easy short most of the time. But even then, let's say it makes its high up here, and the market's hovering in this range where the volume is. Same thing. Easy short. Pretty easy risk to reward here too, because, again, forget the numbers themselves and think about the idea. The idea is what matters. So your risk is market breaks out and goes against you. You got so many different levels of resistance here. First, you got the anchor rail. Then you've got the pivot from Fed Day prior to all of this up here, where the market didn't actually trade that well up here, to be honest. So you got this gap up level. So those are the things I'd be thinking about from just an intraday trading perspective. And then as far as a profit target goes, if you were able to catch this short anywhere around here, again, you got the previous day's high as a floor potentially. And then you got the volume, which is, in my mind, even more likely. And if you were to get just a little bit lucky, just a tad bit, maybe capture some momentum, you don't even have to talk about the previous day's low. You could just say anywhere around in here. This makes this kind of setup ideal. That's why I want the market to gap up first, or have some positive momentum first, and just fail to do anything with it. That's the general idea. So can we? Profit targets and stop levels. Did I type this in myself? There's no way. I would never type any of this. Anyway, titles and labels. Yeah, there we go. This is what we want to get rid of. Prices will keep. Percentages, get rid of. Risk to reward, you also get rid of that. You can stay. But that's the general idea. That is what I want to see. I'm going to screenshot that. Now, obviously, my focus here, the other direction, would be pretty simple. My personal style is to, once again, trade the extremes. Therefore, I would love for the market to, if it really wants to, take this bad news. Right? Take the headline. Run with it. Everything's terrible. World's gonna end. No more peace talks. Kevin Warsh is a hawk, an inside job. It is happening. It's the end of the world. All those things would be great, because then, if the market were to gap down and instead give me some kind of move into this range or this area here. Now you gotta be careful of this being broken. If this is broken, the market might be cooked, at least in the near term. So I'd be careful of that. But if it can give me some kind of early move to the downside, there's two things I gotta be careful of. One, it'll be below the previous day's low. Yep, I'm not a big fan of that. But if, like I said, if we were to disregard this day, which I think makes sense, and it were to hover around in here, yeah, obviously this is a pretty easy reversal opportunity. It's a very similar trade. It's just the other direction. So as you can see, my strategy really is about allowing the market to overreact first, and then not realize that volatility for the week is not planned to be very high, and instead we return to balance. Now, if there are some other developments that happen or that take place, sure, I got no problem with that. But these are pretty solid trades. This is just how I view the market in its current state. I don't think anyone should be preparing for continuation, number one, because continue from what? That's the real question. You can't continue from anything if there's no trend developed. There is no trend right now. You can't continue. And one thing I'm not going to do is, you're going to see this. I bet you somebody on your timeline right now has this drawn and says, we've got a rising wedge here, and the market is gonna break down from here. I'm not gonna comment on the validity of that, because patterns in the market are not what drive price action. But I don't think that's the best way to approach this, because all it does is tell you, hey, you need to have a downside bias because of something that you've seen here. And a lot of this activity happened in the after-hour session. I could easily say, in a very similar fashion, the market traded to the downside, but these kinds of charts, without the after-hour session, these kinds of charts tend to break out. Often. This is true. This happens very often. See, you can make a case. Like I said before, if you're looking for something, you can find it. So I think that's the approach in a market that has not quite made a move. Now, we'll throw a little bit more of the macroeconomics into it in a second, but let's go look at the cues, because this, in my view, factually speaking, has made the more dramatic moves. It has continued to lead a lot of the market. So we need to understand how this is moving, because when this is moving dramatically, a lot of times SPY will follow. And also, same thing, when the cues, let's say, hit an area of resistance, you might not see it on SPY just yet, but it might contribute to why you're not getting any kind of continuation from SPY or from individual names within the market. So all I'm going to do is go here. Okay, there we go. Now we're talking. 14% on the implied. That's for tomorrow. Let's see what it looks like for the week first. Even better. Fantastic. So, daily chart. I'm going to do the same thing. Got the close at 739.83. $729.46. Still, it's kind of a limited range, but it's all good. That works. Put last Friday for Friday's close. And I'll change it to Monday's open or tomorrow's open tomorrow. Anchor rail, same thing, except for we can actually use that for tomorrow. 14%, roughly. $733.19. Good. This chart feels a lot cleaner. And we'll also got, this is week to date. This is, to me, it makes sense to use this instead of the month. Again, the more data you bring in, especially from further out, the less valid that data is, in my opinion. And that's how I continue to view it. So, the way I'd approach this is pretty simple. Similar fashion, only there's probably one thing I would pay more attention to than with SPY, which would be forget the dramatic level that happened here. Instead, obviously, use your pre-market levels, your previous day's levels. There's more of a range that traded here, but we need to identify individual pivots. And because this volatility is higher and this range is higher, if I were trading this, I would use the same philosophy in terms of the extremes, except for I have very particular areas that I can actually point to this time. So technically, this is the previous day's high. Technically. I would still keep an eye on this, whatever this is, because price hovered and hung out here the entire time. But anyway, we got that one. I'm not going to go into talking about potential short anything. The same logic applies. You hover around here and you can't break this. Maybe that opportunity is there for you. And you need to give a little bit more space for the market to make this kind of move. So I'm okay putting that down here. Q is let SPY. The Qs need to clear that pivot. And since it's not very specific, let's put previous day's high / I'm okay putting the rangefinder anchor rail here because it does two things. It tells us how the market is priced in, the volatility or the options pricing, as well as offering an after hours pivot, which is good. So it clears two areas at once for me. So that's the spot. 746.47. So the strat here would be market breaks above that or just under that previous day's high, which would be really good. Maybe the short opportunity is there. I would still give it a little bit of space, like I said, to see how it performs around here in this area if it were to gap up with that potential short. Now, to the other side of this, let's say we're not trading reversals, we're just trading continuation. I'll go back and talk about this with SPY first, but you're going to use the same levels. Now let's talk about the short side or the other side of this trade. We don't need the previous day's low necessarily, but just for consistency, here we are. Not that big of a deal. You can see how they're similar strategies. Market traded a little bit more of a trend here. So we've got all the levels that we need for the time being. There are no other individual pivots that I would pay attention to within this area whatsoever. The main goal is the Qs need to get away from all of this. This is all no man's land. I do not trade anywhere, anything around any of this. Trade the extremes, like I keep saying. We'll actually start here before going to SPY. Let's talk about continuation. As far as a continuation trade, it's very simple. If I wanted to trade this to the upside, I would wait for price to break above this. And honestly, it needs to break above this anchor rail, but you might not get that, and then pull back. So we'll add this to both of them. Not a big fan of using these words. Pivots are fine. Pullbacks, confluence, those things are oversimplified versions of things that really require you to have multiple understandings at once. For instance, the word pullback is overused. Yes, the market might pull back into something, but how do you know it's not absolutely collapsing? Well, you don't. You got to make that determination based on the price action, and you need some quote unquote confluence. I also don't like that phrase, but what this means is I might use volume as one of the things I'm paying attention to, and I might also use the price action. I might also look at the headwinds or the tailwinds in the market from a macroeconomic perspective. So as an example here, the market can break out and quote unquote pull back, and I might be willing to say, okay, it's only pulling back, it's not breaking down, because I have volume from last week here, and because Donald Trump is saying the usual things he's saying right now, and there's going to be a deal and whatever else, and maybe we're not getting any crazy headlines from anywhere, and maybe oil is continuing to tumble, and maybe the 30-year yield in the bond market is, trading at 4.5 or 4.9% instead of 5.12, right? It could be a variety of those things. So if I put all those things together, maybe, just maybe, I feel that it's strong enough, or the market has a little bit going for it. That's what I determine, or how I define confluence. You see how all those things have the potential to not go the way that I'm thinking of them. This is why you got to be very careful with that. The same thing can be applied here, though. The market might break down. And if the market were to break down, it's hovering in this area, I can apply all those same things and look for a reversal. Now, if any of those things turn out to not necessarily be true, well, then I'm using circumstantial evidence. I'm combining a variety of things that may not actually pan out. So you gotta be super careful there. Anyway, the point I was making was wait for break of the pivots and pull back into levels with confluence before trading continuation. And you could say the same thing if the market were to gap down or break down somewhere in here, and it breaks the previous day's low, and it's not going to break the pre-market low. You can kiss that goodbye. It's not going to be a great setup. It's not going to be an A+ setup, as they say. Instead, it's going to be a C+ setup, maybe, because you've still got a couple different areas where price can bounce from. So the idea here for all traders should really be ask yourself, where is my trade in danger? I mean, that's really what it is. You should be asking yourself that. So if I'm trading to the upside, where is it in danger of reversing? Well, obviously, this is why you want to clear the quote-unquote danger first, at least the danger you can see. When it comes to the downside, it's the same thing. Major areas of support, or the pressure rail, for instance, or these levels, this is dangerous. This is why if you go short based on pre-market low and a break of whatever pivot you got here, you need to be looking over your shoulder the entire time. I prefer not to trade that way, which is why I prefer the extremes to be broken first. To me, the upside extremes, this wouldn't even be that, but it will be a break above that and then a retest, and then maybe we can trade the continuation if all those other points of confluence are in place. If the market were to break down and, let's say, close this gap, there's no deal, whatever else, who cares, and we actually do clear one of these levels, if the market gives me a little bounce first and then I see the price action is trading in weaker fashion, then that extreme is there. That extreme has happened already. See, if the market breaks down aggressively here, I would have a very tough time trading continuation because this crazy move has already happened. The odds, the numbers, the probabilities would tell me, well, maybe we actually get a bounce. This is what the market did on Fed day. It did a little late, but you can see how people were buying the bounce aggressively. It made sense. A lot of people were able to make that trade. It worked out just fine. But that's why. This is why you don't short into the hole unless you're trading momentum. All right, so that works for that side. This works for this side. The same process applies. When you're going into a week or you're going into a day where you don't have a lot of information to go on just yet, you need to allow one side of the trade to make the move. You don't need to undercut the move, or you don't need to try and trade the other side of it just for the hell of it. Don't be a contrarian just for the sake of being contrarian. But instead, use deductive reasoning. If the market has a clear path to trading higher and it's struggling with that, then you should be able to form in your mind that there's something overhead, there's something stopping the market from continuing. The same thing applies to the other side. If the market is giving you a very difficult time with headlines and whatever else, and you're just not getting the breakdown that you think you should get, well, market might be looking up or setting up for a bounce. So those are the two things I'm going to put here as a reminder. And I'll make adjustments to my chart based on where the market opens and what is said over the course of the next however many hours, or throughout the rest of today. So we got a few good spots here. As far as continuation goes with SPY, I'm going to tell you right now, unless I'm trading pure momentum, I do not like the idea of trading continuation to the upside in any of this, because there are too many levels that you need to clear and you have limited volatility. That's just my personal view. I don't like it. And I know I have previous days high here. Honestly, if you really want it to be safe, if you really wanted to, I'd take this and I just place it right there. That's how you should handle pivots anyway. Next, what do we got? Sometimes I'll talk about individual setups within the market. If there are structural setups, you got to understand that you are not really dealing with technical setups the same way. If you have a chart that you want me to take a look at, by all means, feel free to post it in the chat wherever you're watching from. And I'll have a look at it. In the past, I had scanners that I would use. And I talked about this before. But, I mean, even this stuff, man, these are cool tools. But for a day trader, especially, even my PEDXing scanner, which is hilarious to me, 1365. Yeah. Some of these are okay, actually. I can't help myself with this IBM trade. I gotta see it one more time. Names that have broken out and began to pull back and are looking for areas of support. This sounds good technically. It does not fit the current market environment that we are in. So that's something I would keep a pretty close eye on. Besides that, the way that I would approach individual names, you can scan for names like using like a 13/30 scan or something similar. As far as momentum goes, we're just not quite there yet. You see this? This is a mess. Turn all the drawings off on any of your charts. I want you to look at your screen and realize this is not the time to be initiating swing trades. It just isn't. And funny how Kevin Warsh came in and sent an absolute missile or a nuke into the thought process a lot of people had, which was, hey, we had a pullback, and if you didn't buy the pullback, yada, 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 2 days ago, absolute crickets from all of them. So that should tell you what you need to know. Anybody who speaks about the market with this this air of certainty, clowns, absolute garbage. Just stop it, because those same people are not going to have that same kind of confidence when things happen that they did not predict. They're going to go silent, to be quiet. So don't carry any certainty into this market, is what I would say. Give the market an opportunity to tell you which direction it is moving or how it's moving. And when you get very strong signals, make the market prove that time and time again. You can adjust your pivots based on the volume and things that are trading. But for right now, especially this kind of weekend, it is definitely a time to pump your brakes and approach it in the way that I've just outlined for you. I'm not going to dive into individual names, but if you have charts that you want me to review, you can send them to me. Just you can comment underneath wherever you're watching this, or you can send me a message. In the future, a lot of the streams will be in the evening. I know it's Father's Day, but we'll try to nail down a time where you can set your calendar and get used to maybe me doing some of this on a more consistent basis. Eventually, though, these types of streams, they are reserved for people that are a part of the site or within the Discord or within Telegram or whatever it is. If you're viewing this from X or somewhere else and you want to join our community, you can send me a DM. Free alpha in the market is, a lot of people will post their ideas. Everything that I've just shared with you now is an actual approach. You are getting a part of my actual edge as a trader. This is how I do it, and it ain't easy, but it is simple. So that will pretty much be it for this one. I will update the pivots as we go throughout the course of the week, and just try it out for yourself. Maybe put those same levels on your chart. I guarantee you they will have relevance throughout the course of the week. That much I can tell you. Enjoy the rest of your weekend. Enjoy Father's Day. If your dad is still here with you, tell him you love him. And I will see you guys throughout the course of the week on social media. If you're in Telegram and Discord, same thing. I'll update a little bit more regarding these charts, and I will be streaming in the Discord tomorrow morning at the open, as always.